Bank of Baroda, the company did come out with its numbers, but what's the way forward? Let's try to know all of that. Let me welcome Debadatta Chand, who's the Managing Director and CEO of the company. Very good morning and thank you so much for your time. And firstly, on your numbers, if I see the advances and the deposits that have shown good growth in the quarter gone by, help us understand what's really driving the growth and what were the pain points for this particular quarter.
So if you look at the advance growth, it is almost at 12.6%. And primarily the RAM book has grown almost at 18%, organic 16%, and overall book is at 18%. Although the corporate growth has been slightly muted at 4.2%, and that is basically a seasonal factor. We had a similar growth last year also. So I think otherwise the growth has been quite strong on the asset side. Similarly, on the liability piece also, if you look at our growth has been basically coming out of the CASA and also the retail term deposit. I think we as a bank are on the liability side trying to manage the liability. We have reduced the bulk deposit almost by 23,000 crore. So liability has been one of the strong points for the bank as the cost of deposit at 5.05. We're at a CASA of 39.33. At the same time, the domestic NIM is at 3.06. So I think we are trying to manage the asset liability in a manner where we do have a good growth. At the same time, able to maintain the profitability of the book, and that is very, very important for us.
Right. I also wanted to understand about your slippages because they have gone up as your international account slipped this quarter. How much of this is provided for and how much and by when do you actually, a recovery coming in from this account?
Normal slippage run rate is something around 2,800 to 2,900 crore. And this quarter it has gone to 3,500 crore precisely because of the international account which has slipped into NPA this time. And as I say that this is one account which is again a secured one. It was restructured during the COVID time and it was showing some sign of sickness in the past also. But this account is a complete secure one and it has gone into some kind of a resolution process in that international territory. So there is a curative period of 210 days for us to again have a look with regard to what is the status of this account. And as of today, as we speak, we have provided 40% on the outstanding as a provision for this quarter, and that is adequate at this point of time as far as the provisioning is concerned. Whereas on the recoverability side, I think we are in a comfortable opinion of recovering the full money going forward. So absolutely, I don't see any challenge on this account.
Okay, no challenges on that front. But apart from this one account, are you witnessing stress in any other segment? We have been hearing about MSME retail segment showing pressure for some banks at least.
No, absolutely not. As I said, our normal run rate is just roughly around 2,800 to 2,900 crore. And if you look at this quarter vis-a-vis the June quarter of last year or also the sequential March, broadly all numbers are aligned except maybe on the retail loan, there is a 150 crore additional slippage in the retail loan. And that precisely coming out of bit of a legacy personal loan book and that has added to 100 or 150 crore. But if you look at, because the denominator is also increasing, the slippage ratio for all these segments, corporate has been almost nil for last 2 quarters. Even if it is MSME, retail or agri, the slippage ratios are, all contained except this one international account which has slightly increased the slippage ratio for this quarter. So I believe that is absolutely, as far as the book is concerned, the collection efficiency is better than the last quarter. On the SME book, were quite contained. So in that scenario, I think the asset quality is one of the strong story as far as the bank is concerned.
All right, but other than the corporate loans, even the personal loan segment has seen just modest growth out there. Help us understand the factors at play here.
No, that precisely the retail book is growing almost at 18%, 18 to 20% for last many quarters. So within that, the PL is a very small component, right? Let's say around 10-12% of the overall book. And earlier also we said that we wanted to moderate on this particular segment. And as compared to the earlier growth of 30-odd%, now it has moderated to 20%. So that's a precise strategy to grow in a manner at which we can take care of the book quality at the same time growth in the segment. Corporate loan, as I said, if you look at the June quarter of last year, the growth was 2.5% YoY. But for a full year, we could achieve around 9 to 10% growth. So considering this is a slack season as far as the overall economic condition, I think on a full year basis, we'll be again achieving something around 9 to 10% on the corporate loan growth also.
Right. Mr. Debadatta, your bank has given a NIM guidance of 2.85% to about 3%, but you also expect pressure in the second quarter. Why is this, and how much more pressure is likely in the coming quarter now?
See, Q2, look at the impact of the NIM or the NI this quarter is, precisely the transition that happened on the asset and liability post the repo rate cut. On the repo rate, if you look at the cut that was passed on this quarter had, not the full impact of the full quarter, and going to be the full impact will be going to next quarter. Similarly, on the MCLR and external linked benchmark also, we are thinking of the repricing happening over there. So clearly, Q2 is going to be, would be taking the impact of all this. At the same time, we have reduced the deposit cost big time. Actually, from the peak level of almost at 735, we have gone to 660 now. So the benefit of the repricing we are going to get in the next quarter. So overall, net to net, I think there would be pressure, but that's why the guidance has been the NIM for June is 2.91, right? So we are giving a guidance of 2.85 to 3 for a full year basis. So there would be impact, but I think the book is so well positioned in terms of the cost of deposit 5.05, CASA at 39.33. I think the guidance that we are giving will be in a position to achieve that.
All right, Mr. Debadatta, talking about the interest rate scenarios, the bank is expecting one more 25 basis points rate cut. Only one rate cut has been passed on in MCLR. Then what gives you the confidence of maintaining the margins at these levels?
So that is what actually the point here is that the liability, the deposit react with a lag time. So the deposit cut that happened in the Q1, the impact has not come into the book, hardly any, very less, because only the fresh deposit you contract at a lower rate, not the existing deposit. So the benefit of the liability repricing going to happen in Q2. So there would be a significant benefit coming out of the liability getting repriced in the Q2. So it's net to net. That is what our sense that to a large extent the cut in the asset in terms of the lower income because of the repricing is going to be balanced out by the lower cost in the deposit also in Q2. And by end of Q2, we believe that something around 70-80% of the deposit would get repriced. So it's both side impact. One is a lower income because of the asset side repricing. At the same time, the deposit cost also would moderate. Our normal estimate as on today that by end of September, possibly the cost of deposit, which is one of the lowest, is going to get at least a 15 to 17 BPS further reduction there. And that's going to compensate the fall in the interest income because of the repricing on the asset side. So we are fairly hopeful, although we'll have a look again on the margin guidance, but fairly hopeful that on an overall basis, like I'm talking about full year basis, we'll be in a position to maintain the 2.85 to 3%. That's our expectation as on today.
All right, and along with that, the deposits have been quite sticky with 300 more branches to be opened this particular year. How much deposit growth is expected to come in FY26? How much will be supported by the new branches?
See, the expansion of the branches is, capturing both the assets and liability in that manner. So ideally, all these branches are the retail branches, and one of the primary focus of is to get the retail deposit therein. And these branches are again going to come in areas in micro markets where our presence is less. So obviously, it is going to help us in terms of mobilizing more deposit. On a normal thumb rule, what do we see that in a branch, newly opened branch, in a year or so, going to have almost a 20 crore kind of a business number. So in that way, at least 300 to 500 crore of additional business that we look at after because of the opening of new branches, at least 300 branches in the next this financial year.
Right. And what is the incremental cost of funds for the bank, and how much more improvement is likely?
See, I'm talking about the cost of deposit first. The cost of deposit was 5.10 as on March, which has gone down to 5.05 as on June. And when we be at the September, our estimate now it would again go down below 5. Maybe around 15 BPS is the cut that you are looking at, and that is going to significantly give us a huge saving in terms of the interest expenses.
Okay, talking about your forward-looking plans, the bank has recovery target of 10,000 crore for FY26. How much recovery was done in Q1 and how much will be done in Q2? Does it also include the international accounts?
No, as on today, our normal recovery target, it talks about 10,000 crore of recovery in a year. So on a quarterly run rate, you talk about something around 2,500 or 2,800. So clearly, we are on track in terms of recovering this kind of money quarter to quarter. Normally, June quarter is a bit of slack because a lot of movements happen and slightly we get a lower recovery. But going forward, again, the recovery, I give you one data point saying that whatever slippage has happened in this quarter, as we speak, there is a lot of pullback already happened. So in that manner, we are quite hopeful. Last year also we achieved that number. We are quite hopeful that in a full year basis, we'll be in a position to, recover almost more than 10,000 crore.
All right, but just to follow up there, does this include the international account as well?
It doesn't include that. The international account will get a full clarity maybe at the end of 210 days only, right?
Right. So, Mr. Debadatta, what would be driving the growth ahead for your bank?
See, one of the strong story of the bank is with regard to the liability management, right? If you look at currently, the industry outlook and the industry numbers are, at cost of deposit of 5.05, CASA of 39.33, margin of 3.06, and a CRAR of in excess of 17. It gives a very huge potential for us to capture the opportunity the market offers. And I think the market has a lot to offer for banks like us to grow in scale and also size. So that is point one. And secondly, it also, the book is so resilient now that any headwinds that we see because of geopolitical scenario, the book is also quite robust and capable of handling all those headwinds. So in terms of the overall construct of the book, I think the bank is well prepared to capture the opportunity the market offers. At the same time, if any headwinds come, then the bank is better prepared to handle those. Something overall construct or overall, what you can say, the balance sheet perspective vis-a-vis the results that you have declared.
All right, Mr. Debadatta, thank you for all the views and helping us with the bank's plans going forward. Thank you and all the best. Best wishes for the coming quarters. On that note, we slip into a short break. While we come back, there's a lot of discussions lined up. So you stay tuned with ET Now.